Good morning, and welcome to the Rick Helps Real Estate Podcast or live stream, whatever we want to call it. The intention of this channel is to share real numbers with you so that you can understand what's going on in the Arizona real estate market and you can be a hit at all the cocktail parties. So if you haven't subscribed yet, please do that because then you'll get notified whenever I add new content. And I'm thinking about maybe doing a live Q&A this afternoon, time permitting. I have to go to another part of the valley, but I expect to be back in time. I thought maybe tonight I could do that. So if you're a subscriber, you'll get a little notification. I think I was blowing you out on the mic. Got notice here from the CDC this morning. I think this is primarily addressed towards Arizona and Florida. Said the CDC just announced you can stop wearing socks with your sandals. So that's good to know. The Phoenix City Council lifted the mask mandate and put it all up to businesses to decide if you need to wear a mask. So they're just agreed to follow the new CDC guidelines. So things are opening up out there. If you're trading digital coins like Bitcoin and Ethereum, man, yesterday could not have been worse. It just took a nosedive. But here's the interesting thing. 831,000 accounts had a margin call, which meant, you weren't just trading the Bitcoins. You were using this much money to trade this much money, and they called and they cleaned out your account. You had a margin call. Those are dangerous when you're doing options. One account had a margin call of $64 million. How would you like to wake up and see that in your email box in the morning? So, that's a sign of rampant over speculation, kind of like what we were seeing during the dot-com days. So it's wild out there, just absolutely wild. So I've got some numbers today. Nothing drastically changed. It's interesting. We're at 4653 of available homes on the market today. That's not a normal leap up that we normally see on Thursdays. Maybe as the day progresses, we'll see another 200 come on there. The 7-day moving average is 42.72 with 41.35 going under contract. So that's a difference of 137. So again, nothing major. If a third of my subscribers went out and bought one house between the 400,000 and 500,000 range in the valley, you would completely dry up all the inventory. That would make news. That's how tight this is. I mean, you think about it, there's 4,600 homes available. That's single family, townhomes, mobile homes, condos. If you get down to single family homes, we have I think it's 3,500 homes. That's it. In populations where Phoenix is 1.7 million, Chandler, Gilbert, and Scottsdale are all around 265 to 269. That's a lot of people, not very many houses. So until we get some relief there, we're gonna continue to see this, and that is we really need this line to go away that says that 59.2% of all homes are selling over the list price. When you get it down to certain price points, like the one I just mentioned, between 400 and 500,000, where it's 61.6, between 3 and 400K, where it's 67.2% going over the list price. So until that inventory number pops up, we're going to be seeing that. And so, it'd be nice if that goes away soon. So what's going to make it go away? Like I've been saying the past few days, when inventory goes up, it's going to be easier to go in then and see why it went up than it is to try and predict if it'll go up. It does not look like we're going to see forbearances turn into foreclosures. So far, the forbearance numbers are almost down to where it's rather insignificant by the end of the month. We're waiting to see what the end of the rent moratorium does for the market. But again, we won't know till end of July or August. So we got to wait that one out. Foreclosures, there aren't any at all. If you wanted to go find a foreclosure today, I don't know how you're going to do it. They're not out there. And in a market like this, foreclosures are not that big of a bargain because the bank always sells them as is. They're not going to fix diddly or squat. So they're not really the great thing to do. They're just not out there. Now, couple of points here that were made by the Cromford report. And she's quoting, she or he, quoting Barry Habib. He's a guy with a mortgage company, and he's talking about affordability. So he makes a comment. He says he said that home price appreciation, assume if home prices rise by 20% and the median earnings only rise by 5%, we have a big drop in affordability. However, this is an illusion. If your monthly mortgage payment is $1,000, who's got a monthly mortgage payment that's $1,000? Then a 20% increase in home prices will push that payment up by $200. They're using $1,000 just to make the math easy. If your monthly income was $4,000 and you got a 5% increase, that's also $200. Makes sense? So your 5% increase in earnings is enough to cover the extra $200 mortgage payment. So if that tells you that maybe we're not peaking at affordability yet. So admittedly, your mortgage payment used to be 25% of your budget and it's now 28.6. But to most people, this will not put them off buying a home, especially when they foresee the home equity increasing, making them wealthier over time. Now, here's the part I like to see. They agree what I've been talking about the past few weeks. There will be an impact on the down payment too, which may be more of a disincentive, and that's because of the bidding wars. So your down payment's going to go up. However, we're seeing a proposal for a $15,000 tax credit. You know what I think about that for first-time home buyers, which could offset this. In fact, we are concerned that a $15,000 tax credit could increase the demand when the market already has more demand than it can handle. So there you go. Somebody else saying that the $15K that they may give you to spur first-time home buyers is not good. So think about it. That price range that I gave you between $400,000 and $500,000, let's go down even lower between $300,000 and $400,000. And now they're coming in with that $15,000 credit. That price range is going to dry up immediately. 2 months, boom, you can't find anything between 3 and 4. That's not going to help anybody. So that's going to be something to watch and see if that shows up. I hope not. So yesterday, what happened yesterday with Chairman Powell? When the Fed speaks, rates listen. So he didn't really give a talk yesterday, but they released their minute notes, which goes into great detail about what they're talking about. So Fed Chairman Powell is the chairman of the central bank, but then they have other people within the central banking system all over the country, and they all have to agree on what the next move is. So what they said here yesterday was a number of participants suggested that if the economy continued to make rapid progress towards the committee's goals, now the committee's goals is inflation consistently staying over 2% and full employment. It might be appropriate at some point in upcoming meetings to begin discussing a plan for adjusting the pace of asset purchases. So what does this mean in real speak? They're buying, I believe it's $120 billion a month in treasuries and mortgage-backed securities. So the Fed's going in and buying those. That's what's keeping rates low. And so they're going to start backing off from that. Now, they can't go right. If they were to come out today and say, all right, that's it. We're not buying those anymore. Good luck. Rates will go through the roof. Real estate will tank. So they know they can't do that. The danger that they're having too is that when they even just mention that they might, even a year out, rates listen and they move. So they're saying, they're actually stating the obvious, saying, look, hey, if the economy starts smoking, starts doing really well, we may have to address this. Just saying that yesterday afternoon. Watch this. Here's when he said it right here. That's when the press came out. Boom. This is the bond market. When the graph goes down, rates go up. Now, it has since recovered. But, they looked at that and go, oh, no. So imagine what that's going to do when they finally announce they're going to have a pullback. So here's the yield on 10-year Treasury notes. Same thing. It took a dip and then went way back up. Now, this hasn't affected interest rates. So it affected some of the fees that lenders charge closing. So you might have a lender fee that's, you get a rate of 3% and there's a $1,200 fee. So the fee might have gone up to $1,800. It didn't really screw anything up yesterday. It's just that it illustrated how sensitive the market is to anything that the central bank says they might do. And it tells you that if they come clamping down and they want to, you know, clamp down, stop buying mortgage-backed securities, we're going to see rates fly up. Now, where rates are going to be next year, I have no idea. That's out of my area of expertise. But we're still hovering around 3, and you can get some under 3. So you need to watch that closely. We're not seeing any upward pressure today. The Fed is basically trying to figure out how they can ease us in to backing off buying mortgage-backed securities. Because when Bernanke was in there and they just announced at a congressional hearing that they're going to back off in 2013, that's when we had that new term called taper tantrum. The bond markets just had a fit and interest rates went up, and they left it there for about a month and a half. Then they had to come in and go, yeah, that probably wasn't a good move. We're gonna go ahead and start buying mortgage-backed securities again. So talk amongst yourself. And it was painful. Rates went flying up, and they thought the economy was heating up good enough that now they could afford to do it, and that was not the case. So we really don't know where this is going to end up. What we're struggling with right now, when I say we, the industry, is you're comparing May numbers to April and May last year when everything was pretty much shut down. Now, last year, we started digging out in May and the market started taking off, the real estate market. So comparing year over year data, that number is going to look really good. And then the inflation number looks high. But the inflation number is driven because we just can't get things. We're having a hard time getting things shipped over. Lumber mills were shut down, so there isn't enough lumber. And yesterday, there were a lot of articles out there that were saying that the housing industry was coming to a screeching halt, and it was a 9% decline in new building. And there was a show on MSNBC that I saw on YouTube, which I thought was ridiculous. The title said, "Is this the end of housing?" And it really shows you the sensationalism over one number. They just pulled back nationally 9%. They did not pull back in Arizona. They're not slowing down. They're doing a steady pace simply because they don't have enough labor and they don't have enough material. So they're just trying to pace it out. But here they look at this number from the Midwest and the South. It says that builders backed off by 9%. And you end up with a panel on MSNBC saying, "Is this the end of housing? Is housing done?" Really? It's, sensational news. So you really there's always something going on behind the numbers. And today, the mortgage market's recovering because they looked at that and said, well, yeah, he's kind of stating the obvious, but you're going to see headlines that rates spiked, and they didn't spike. So it's very interesting. Having a little chat session going on here with Bar 608 and Strong from Italy. He says it took over a year to get a refrigerator I ordered delivered from Germany to Italy. Did they bring it by horse? It's about 3 weeks here, I believe, to get a refrigerator. And now, so when you're going out and buying a home, usually you go in and you look and it says on the MLS, refrigerator included. You didn't really pay a lot of attention to that. Like, if they didn't include the fridge, I'll go get one. Now you really pay a lot of attention. So you kind of fight and say, no, I want the fridge to stay. But the sellers, they don't want to leave the fridge because they know as soon as they close on their house, they got to go get another one and they got to wait a month to get the doggone thing. And then when you're buying a house, as soon as you get your contract accepted, you got to go fridge shopping that same week. So during the inspection period, you're not just inspecting the house, you're hanging out at Home Depot. So the refrigerator is a big deal. It's tough. Supply side issues are really making the real estate market muddy. Now, in Arizona this weekend, I expect it to be a pretty busy real estate weekend. We are going to have fantastic weather. It's going to be between 85 and 89 Friday, Saturday, Sunday. Great time to go out shopping for a home. You're not sweating like a pig. And but inventory is going to be tight. When you go up to see a home, somebody's already going to be there, and when you leave, somebody's going to come right behind you. So I don't see any relief in that. And if inventory doesn't pop up today, I'd like to see another 400 homes come on the market today, because our Thursdays have been hovering around 4,900 to 5,000, and now we're a little low. In fact, while I got you on here, let me check and see if that's moved at all. Bear with me. I'm going to roll this over, and we're going to take a look together. So let's look at this. Let's see what's going on. What I do is a quick search and pull up active homes only. And so now we are at 4,671. So we went up almost by 20 units. So that's what Thursday does. Thursday will climb up a little bit. If we look at the list price and I go between 300,000 to 400,000, that's the one that's kind of drying up. Then we're at 799 homes. Looks like a lot when you look at the green dots here, right? But it's really not. You start drilling down by neighborhood, and you can say, okay, there's only, about 6 here. So that price point is rapidly disappearing. But that's the market that we're in. So we'll see what happens. It's going to be a wild summer. A lot of conjecture about what July is going to bring us. And, there's surveys out there saying people are going to start listing their homes in July. But normally, July historically, before all this mess, was a time when more homes came on the market. It was in July and it was in January. So more listings come on in July than in any other time of the year, with the exception of January. But all of that's gone. All of that's gone. So there's no seasons right now in the Phoenix market. So tomorrow is Friday. That's when I meet with lender Pat. We'll dive in and see what he saw on the lending side with that little temper tantrum yesterday, and see what's going on. And I may do a live Q&A this afternoon. If I do, I'll put something up here that says join me for the Q&A, and it'll give you plenty of notice. My schedule's kind of loose today, so I thought it'd be kind of fun to do. So ask me anything you want to know about the Arizona real estate market, and if I don't have the answer, I will tell you, heck, I have no idea. So until then, take on the day. It's going to be a beautiful one. Take care.